Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. Stocks finished stronger today on the heels of a violent weekend and a sad chain of events. Floyd's death a week ago, but cities around the country are just being torn apart. Domestic terrorism, I mean, that's what it is. Chicago, it's in pieces. It's burned down, basically. But stocks are higher. This really didn't just start today. It was on the heels of President Trump's China comments on Friday. There was a big buildup to see what he may do, what sanctions will be imposed, and how that phase one trade deal might get sort of tossed out. But ultimately, what came from it is he didn't do a lot to punish China, and China really hasn't done much to punish America, and they're sort of just posing against each other. And stocks have benefited. The market turned sharply higher Friday. Very surprising to see that, and then coming out of the weekend, very surprising to see the market on solid footing given the events over the weekend, and then even this morning. China had announced that they're going to rethink purchases or hold off on purchases of agricultural products. So the phase one deal is in jeopardy, but markets are not concerned about jeopardy. I mean, really, they're feeding off $7 trillion plus balance sheet of the Fed, feeding off fiscal stimulus, other monetary measures. But really what it comes down to is the momentum's there. There's no other place to put money. We pointed to that this morning in the Morning Express. 70 basis points, basically. That's the 10-year yield. Pension funds with trillions upon trillions of dollars need to put money to work somewhere, and stocks have been the answer. There's a lot of great companies out there. Tech has thrived. Healthcare, biotech, they've all thrived. I mean, banks have had their days. The banks have had their weeks. Banks finished strong today. Industrials have had their days. But there are a lot of stocks that have done well through the COVID. And there's a number of things to also take into account. The fiscal stimulus measures. I mean, look at the personal spending data last week. Even though for the month over month from April compared to March, it fell precipitously, but the income data was a record surge because of the stimulus checks, because of unemployment wages. So you're seeing the market really kind of shrug off what's going on. It's essentially disconnected from reality. And I point out that I'm not a perma bear or really very bearish sitting here. In fact, I've written very bullishly many times. Blue Line Capital, our other arm, is a wealth management company. We're long stocks there. I'm long stocks. So, but when it comes to trading, it just doesn't make a ton of sense to see this market melt up every day from normal angles. But again, you add that Fed balance sheet angle in there and all these stimulus measures, and then it starts to make sense. And the world was pricing in zero. I mean, we were pricing in zero demand amid the panic. And markets exacerbate to the downside. That's what we've seen. And then we're now in this recovery. But once the ball gets rolling, until there's a reason for the market to really stop, that reason could be U.S. and China tensions. There's really nothing that's going to push that ball off. It's off course, and that's where we've seen it. There's leadership out there in the market. Some of the big tech stocks did really well today. Let's just look at that. We'll take a look at the heat map. Take a look at some of the stocks you see. Facebook, big day. Amazon, the Netflix, strong day. And then, look, Disney's up big today, but Disney was down last week. You're getting different stocks that are taking hold in different days. Healthcare down this week, but healthcare had some good days last week. Banks, some J.P. Morgan, Bank of America, Wells Fargo, Citigroup, they all had strong sessions today. They started the week off last week extremely well, settled in a bit, and then now they're continuing. So you're sort of seeing the baton passed between different sectors from time to time. But outside of some of the big tech behemoths and the Disney and the Netflix, Comcast, you're seeing some good amount of red in the board there on tech. Microsoft is down. Semiconductors moved well late Friday after nothing was done by President Trump when it came to U.S. and China tensions. So now they've settled in a bit. I mean, China is in U.S. the potential trade war, reinvigoration of such is definitely a cloud in the sky right now over this market. But the market is not concerned about it. And let's take a look at the charts. You got the S&P, strong days. We're out above the 200 moving average. This is support now. We're running into what is our resistance. So 30, 48, 3053 is a major 3-star resistance level of ours. It's struggled to hold out above there. So keep that in mind. We talk about all that in the Morning Express. The levels are there. Our bias is there. Neutral right now, but we have been bullish at times recently. And then the NASDAQ. NASDAQ is this blue line. It's the record high. I mean, it's right there, 9,600. We're just below 9,600. And we're right there. What's the record high exactly is 97.63, and right there. I mean, what is it, about a little over 2%, 3% away? So again, what we're seeing here is a 50-day moving average crossed above the 200. You're getting a tailwind from this. But when you take a look back here, the Russell 2000, the small caps are well below the 200-day moving average, and they got resistance. We discussed this resistance last week. I got this resistance level here. But remember, the Russell 2000 did not make a new high. This is that high from September 2018, and you got the 618 retracement. It's facing here too. So a lot of resistance in this range for Russell. And we've talked about it here. If you're going to be looking to short something, we prefer the Russell 2000. Outside of what, looking at the chart now, early last week, that was a big surge higher. There's some regional banks performed really well, 10% days back to back. There it was a big run, but it's settled in since then. And if you're looking to fade something, the Russell 2000 is what we prefer to be looking at. To the downside, you don't want to stand in the way of tech. Some people call me and say, Bill, I want to fade tech because there's more to the downside because it's moved bigger. Well, your eyes are glowing, but it's not the smartest play. Reality is the tech could sort of stay sideways. We've seen the sector rotations. You want to avoid those big days where the Russell could run, but overall, the market were to start moving lower at all. The Russell 2000, it's had the most shallow recovery, and it's below that 200-day moving average, and the selling would likely pick up a bit to the downside there, and probably just as equally to the NASDAQ in some manner, but then you avoid the large, big behemoths reversing and coming out. So again, focus on the Russell 2000. If you're looking to fade something, that's where we would look to come in. Moving on, though, the crude oil, and again, we're neutral in crude oil here. We've called it exhausted, but it just doesn't seem to want to turn down. So big day, breaking out of a range on Friday. It's still running into that resistance. However, it's now out above it today, sort of held above it for a lot of the session, and you still have resistance levels. But once it gets above about 37.5, sort of an air pocket here from that gap settlement. And you know what? Crude's saying it wants to cover it. You have OPEC. Thursday, they're going to meet, and they're likely looking to extend this pandemic cuts for a bit longer. But one thing to keep in mind is the RBOB. RBOB gasoline has not broken out of that range the same way crude is. Good resistance here, about 110.5, and gasoline, very big ceiling there. And if you're looking at gasoline, it's higher, grinding higher, and then you get this range heading up. And I've said it before, when ranges sort of start to tighten, you're going to get a move. Now, we're not calling it up or down from here, but what we are saying is we would expect gasoline either to move out above there or break down through there. And, it's going to happen this week because you get inventory data coming on the heels of last week was a little more bearish again. But then you also have OPEC on Thursday. So Wednesday, Thursday are going to be pretty critical here for crude oil, for gasoline, for the energy sector. And then look at the metals, silver. It's been a huge move here. Bull flag moved really well the last two sessions. It actually moved through that trend line, the 1850 level we've talked about. But one thing to look back at silver here, back after the Brexit, 2016. See, silver can really move. So you want to keep in mind this was a move from 1750 up to spikes at $21. Silver can really move, and so it is facing some resistance here. These resistances, but man, if it chews through there, it could really see quite a surge. And $22, $21, really, as some of the technicals in silver, it's not like it stops on a dime. It could just, you're seeing 50-cent swings when it starts breaking through levels. So we expect continued volatility in silver. We are bullish silver, and if you're looking for a way to play it, give us a shout. There's a number of ways to look to do this. And then gold, this is a 30-minute chart for gold. I know I usually cover the daily charts. This is a 30-minute chart for gold. Got the trend line break, helping bring some momentum. Now, it's using the 382 as support. This was our previous resistance, 1744. So 1744 is going to be a pocket of support here for gold. Above there, it's bullish across all time frames. We like gold long term. We've been very bullish for a while, and we'll continue to be. And I've been talking about this June contract expiring. The June contract expiring last week. We're now August. Is in last year when we went to August, it started rallying and never looked back. So can we start to see some of that happen again? Silver may need to be the leader. We like the metals complex. We like gold and silver. So keep an eye on those. Again, we're here to help if you want to look for a strategy way to play that. And then lastly, let's take a look at the currencies, because the euro, another big day. It's put on a couple strong days in a row, going back to the middle of last week and turning higher last Tuesday. Is it in the clear? No. I mean, we're still in this area of just a lot of volatility. Previous peak before it fell out, 111.90 is going to be some resistance. It also is the 618. And then another thing we're sort of looking at here in the euro, outside that big spike, I mean, you got this here, be a little manipulative with the line. I mean, but the idea is there outside of this spike, there is a downtrend that it is testing right now. And nothing's perfect. We don't use trend lines to trade off of. We use them to help define the direction of momentum. And so for that purpose there, that's still an idea of some resistance that it's running into. I've been bullish. We've been bullish the dollar. We've been bearish the euro. So, I don't think that the euro, this sticks. And there's a lot of news and a big week coming out. And one that has news more in the next 24 hours is Australia and the RBA. The RBA meets tonight, overnight into overnight U.S. hours. Big day for the Australian dollar. Big day for risk currencies. The Canadian dollar put a big one. The British pound was moving higher too. It's not so much of a risk currency, but the pound higher. The dollar was just broadly weaker against a lot of currencies. Even the yen was up a bit. So, but the Aussie out above the 200-day moving average, and just a big strong day. Obviously it's not really, you're breaking out of something here, but again, we don't. I mean, the market, some reality is disconnected here. I don't think this sticks. There's a number of ways to try and define your risk, capitalize to downside in potential pullback here in Australia, but got a lot of data coming out of Australia tonight. The RBA meets overnight. Got GDP out of Australia tomorrow night. So a lot of data. And then as we move into Wednesday, unemployment data from Germany. You have ADP payrolls, a quick glimpse on non-farm payroll from the U.S. on Wednesday. A number of other big numbers, ISM non-manufacturing, and then ECB on Thursday. And then on Friday, of course, non-farm payroll. So a lot in between that. You also have Bank of Canada on Wednesday, too. So we're here to help. Give us a call. Don't hesitate. 312-278-0500. That's our line. But remember, futures trading involves substantial risk of loss. It is not suitable for all investors. Thanks a lot.